Imagine watching your investments grow steadily, only to experience a sudden, unexplained drop. What if that drop wasn't because of bad news, but potentially a mistake or manipulation? Today, we're diving into what's happening with SoFi, breaking down key data points, and exploring what's really moving the stock. If you're ready to get the full story, keep watching. This could change how you view the markets. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Let's get started. SoFi Technologies has been making headlines, and there's a lot to unpack today. At the moment, SoFi is up 1.41% with about an hour left in the trading day. The stock is hovering around $14.85 at the low end and $16.05 at the high end. This comes after a volatile sell-off that had nothing to do with fundamental data points or major news. Earlier today, we saw non-farm payroll data come in better than expected, and unemployment numbers were aligned with forecasts. Despite this positive macroeconomic backdrop, SoFi experienced a sudden dip. This wasn't due to company-specific news or regulatory filings. In fact, there were no new SEC filings or announcements. The most likely explanation? A large entity, possibly a short seller, made a significant error or took an aggressive position, triggering a wave of stop-loss orders. Within the first 20 minutes of trading, we saw this dramatic move downward, which seemed entirely unrelated to the day's broader market trends. Short interest remains a critical factor for SoFi. As of now, shorts are returning 240,000 shares. This means 13.24% of the free float is still being shorted, equating to 141.03 million shares. Interestingly, the cost-to-borrow rate has hit a negative value. While this is an annualized rate and not a massive red flag, it's worth noting as brokers attempt to attract more business in this area. In terms of trading volume, we're seeing around 47 million shares being traded compared to the 58 million average. This relatively low volume suggests that today's moves aren't necessarily indicative of a broader trend, but could still represent opportunities for sharp-eyed investors. Options data paints a more optimistic picture. While the markets are still open, there have already been 28 million call options and 4.58 million put options traded. Interestingly, 45% of today's options activity for SoFi is bullish, with significant open interest around the $16 strike price. The activity suggests that many investors are positioning for a potential upward move, with a general consensus targeting the $17 range in the near future. This is consistent with broader market trends, as fintech stocks in general have shown strong performance today, with some up as much as 5%. Could this volatility be due to manipulation? It's possible. Shorts may have been aiming to suppress SoFi's price, ensuring it doesn't break critical resistance levels. This kind of market activity isn't new for SoFi or fintech stocks in general. The fact that SoFi briefly dipped while other fintech companies surged raises eyebrows. Let's move on to the technicals. Yesterday, we saw the first signs of weakness in SoFi's chart. Today, the stock remains below its ALMA, Arnaud-Lagu moving average, signaling potential consolidation in the near term. However, this consolidation has also reset key technical indicators, leaving SoFi in an oversold position. Oversold conditions often precede upward momentum, especially when fundamentals remain strong. Based on Elliot wave projections, SoFi could reach the high $19 range in the short term, with resistance levels at $16.83 and support around $14.55. These are large ranges, but they align with SoFi's broader trading patterns. From a macroeconomic perspective, the data has been overwhelmingly positive. Strong employment numbers and stable economic indicators support SoFi's upward trajectory. Additionally, analysts are increasingly highlighting SoFi's potential, with more articles and commentary bringing up its December 4th performance. SoFi's growth story isn't just about numbers, it's about its positioning in a rapidly evolving fintech landscape. The company continues to gain traction as a leader in the financial technology sector, and its technical setup remains attractive for investors. Based on current data, SoFi's short-term price target could realistically reach $18 to $19. While resistance levels around 16.83 cents may slow momentum, a break above this level could trigger further gains. Shorts may attempt to suppress the price again, but strong fundamentals and bullish sentiment in the options market suggest that such attempts are unlikely to hold back SoFi for long. If you're a SoFi investor or considering entering the market, this could be an exciting time. The combination of technical strength, macroeconomic support, and a bullish sentiment in the options market creates a promising outlook. Final thoughts. While today's sell-off might have been unsettling, it appears to be an anomaly rather than a reflection of SoFi's broader trajectory. With strong fundamentals and positive technical indicators, the stock remains a compelling choice for growth-focused investors. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.